Hello friends, very warm welcome to my business laws channel. Friends, in this video, I'm going to take up taxation of LLP, and this will be the sixth video to the LLP Act 2008. So taxation of LLP, friends, the LLP Act 2008 is silent about the taxation of LLP. But the Union Budget 2009, announced on July 6, 2009, has laid down the roadmap for taxation of LLP in India. So, as per this roadmap, friends, LLP is to be treated at par with general partnerships. So, their change has taken place in the definition of firm, partner, and partnership under Section 2, subsection 23 of the Income Tax Act 1961. So, the Finance Act 2009 has amended the definition of firm, partner, and partnership in the following manner. So, friends, according to this, the firm should include a LLP as defined in the LLP Act 2008, and the partner shall include the partner of LLP also as defined in the LLP Act 2008. The partnership firm shall include a LLP as defined in the LLP Act 2008. And now, friends, Section 184 provides that in order for LLP to be assessed as a firm, if the LLP is to be assessed as a firm, it has to satisfy certain conditions. And now 6 conditions I will take up one by one. The very first point is written LLP agreement. Though, friends, LLP agreement is not mandatory, but in case the LLP has to be assessed as a firm, then in that case the LLP partners have to draft the LLP agreement. Second is specification of shares of partners. Whosoever is a partner of the LLP, his share should be very clearly specified in the LLP agreement or deed. Next one is certified copy of LLP agreement and the return of income. A certified copy of LLP agreement should accompany the return of income of LLP of the previous years in which the LLP was formed. So this accomplishment is also must. Next point is submission of revised LLP agreement in case of changes. In case any change takes place in the constitution of LLP or in the profit sharing ratio, then in that case, LLP is required to submit, revised LLP agreement. A certified copy of the revised LLP agreement shall be submitted along with the return of income of the previous years in question. So whatever is the previous year, the return of income of that year should also be submitted along with the revised LLP agreement. And the last point is no failure to attend to IT notices. IT is income tax notices. There should not be any failure on the part of LLP. Any notice which is received from the income tax officer, okay, the LLP partners should not have failed to attend to those income tax notices. Okay, so all these are the conditions which must be satisfied. Then only the LLP can be assessed as a firm. And now, a very important heading I would like to take up, friends, which is taxation treatment of LLP. What are the various provisions relating to the taxation treatment of LLP? So there are 16 points. All the 16 points I will take up one by one. So the very first point is, friends, rate of tax. There is no change in the tax rates in the Finance Bill or Budget 2022. So therefore, tax rates applicable to both the assessment years are the same. So for the assessment year 2023, financial year 21-22, and the assessment year 23-24, financial year 2023, flat tax rate of 30% plus health and education cess, that is HES at the rate of 4% will be payable by the LLP. So friends, the effective tax rate will be 31.2%. So friends, I would like to take up this rate of tax and I will explain with the help of example. Let us presume friends the LLP income is 1 lakh and we are presuming this entire income is taxable and so there is no exemption. The tax would be calculated at the rate of 30% on this 1 lakh. And if we calculate 30% on 1 lakh, it turns out to be 30,000. And HES at the rate of 4% on 30,000. And this amount is 1,200 rupees. So total tax will be 30,000 plus 1,200, that is 31,200, which is 31.2% of 1 lakh rupees. Coming to the second point is profit and losses of LLP taxable in the hands of LLP. So all the profits and losses of LLP would not pass through in the hands of partners, but they will be taxable in the hands of LLP. But in Singapore and UK, under this LLP system, the rules are different. There, the LLP is income of the LLP is taxable in the hands of partners and not in the hands of LLP. But in India, it is taxable in the hands of LLP. So we are having different system in India as well as Singapore and UK. Third point is filing and signing of income tax return. ITR, income tax return 5 is applicable to LLP. In LLP, you all know friends, we are having normal partners as well as designated partners. And designated partners, they are always responsible for the legal compliances of LLP. So ITR has to be signed by the designated partner of the LLP. Next point is partner's liability to pay tax. Partner's liability to pay tax is jointly as well as severally. He is jointly as well as individually liable for the taxes to be paid by LLP. Now subject to the conditions which have been laid down under section 167 for the period during which he is a partner. So friends, his liability is joint as well as individual. Next point is intangible contribution. Intangible contribution. You all know contribution. Whatever partners contribute to the LLP is known as contribution. Contribution can also be intangible, that is patent rights, goodwill, trademarks. So this intangible contribution shall be taxable not at the time of introduction in LLP when they join the LLP. Only it has to be taxable at the time when they want to transfer or they cease to they have decided to leave the LLP or at the time of winding up of LLP. So it will not be taxed at the time of introduction, but it is to be taxed at the time of transfer, cessation and winding up of LLP. Next point is about AMT, which stands for alternate minimum tax. In order to save revenues on account of companies converting to LLPs, Finance Act 2011 has introduced a new chapter in the Income Tax Act 1961, which provides for the levy of alternate minimum tax. And this new chapter provides that if the regular income tax payable by the LLP for the particular financial year is less than the corresponding alternate minimum tax. Corresponding alternate minimum tax. If it provides, the new chapter provides that if the corresponding income tax, the new chapter provides that if the regular income tax payable by the LLP for a particular financial year is less than the corresponding alternate minimum tax computed on its adjusted total income, then such alternate minimum tax shall be deemed to be the income tax liability of such LLP. LLP is liable to AMT at the rate of 18.5% plus an education cess of 3% on the adjusted total income of LLP. So the effective rate of AMT including cess is 19.05. That is 18.5% plus 3% education cess. So this will be 19.05. So let us take example in order to clarify this particular term. Let us presume, friends, the taxable income is 1 lakh and adjusted total income is 5 lakh rupees. Then the normal tax 30%, if we calculate on 1 lakh, it turns out to be 30%. And AMT on adjusted total income of 5 lakh at the rate of 18.5, this turns out to be 92,500. So the tax payable in this case will be, so 92,500 is greater than 30,000. So we'll take into account the 30,000 amount, and this excess 92,500 minus 30,000, which turns out to be 62,500. This amount is allowed to be carried forward for a period up to 10 assessment years. Okay, so I hope you must have understood, and if you still have any doubt, you can always write in the comment section. Point number 7 is not liable for dividend distribution tax, which is DDT. If a company declares or distributes dividends, it is required to pay additional income tax at the rate of 15%. But LLP is not liable for dividend distribution tax, as there is no such, because dividends are never distributed by the LLP. And point number 8 is benefits of presumptive taxation not available to LLP. Now, according to Income Tax Act 1961, LLP is not eligible for presumptive taxation, meaning thereby that LLP is not entitled to avail the benefits of Section 44 AD. So, benefits of Section 44 AD, they are not available to the LLP. Next point is point number 9, which is submission of audit report. LLP is required to submit audit report under Section 115 JC subsection 3 on or before the due date of filing of ITR, certifying the total income as well as alternate minimum tax. The due date of filing of ITR may be different, whether accounts are to be audited or accounts are not to be audited. And point number 10 is regarding interest on capital and remuneration. Interest on capital and remuneration received from the firm is taxable in the hands of partners as profits and gains of business and profession. So you all know, friends, business and profession is one of the heads of total income. So, this is always to be treated as profits and gains of this head of total income. Next to this point is share of profit. Share of profit received from the LLP by the partners is exempted from tax. So partners are not required to pay any tax on the share of profits which they receive from the LLP. So point number 12 is no capital gain on conversion. We all know, friends, that partnership firm is to be converted into LLP or company is to be converted into LLP. Then in that case, no capital gain arises. Then capital gain will not arise or in case of conversion, provided the conditions which are enclosed here, which have been satisfied. Point number 13 is rights of successor LLP. If partnership firm is to be converted into LLP, let us presume all formalities have been fulfilled, and now that successor LLP, on conversion, the successor LLP will be allowed. So there are certain rights which are available to the successor LLP. Now, which are these rights? The first one is to carry forward and set off of accumulated losses and unabsorbed depreciation allowance. So this successor LLP will have the right to carry forward and set off of accumulated losses. All losses, will be set off and they will be carried forward. And also, the depreciation allowance which has not been absorbed yet. And to write off the expenditure incurred under VRS, Voluntary Retirement Scheme. So this right is also available to the successor LLP. However, on conversion, the successor LLP will not be allowed to take the credit of MAT. MAT stands for Minimum or Alternate Tax. So you must have understood, friends. Already I have explained this with the help of example. Next point is surcharge. LLP is liable to pay surcharge when the total income, the net income exceeds rupees 1 crore. And what is the rate of surcharge? Surcharge will be at the rate of 12% of income tax. And HEC will be computed in case the surcharge is levied. HEC will be computed on the combined amount of income tax plus surcharge. Due date for filing ADR. So already I have told you accounts are to be audited. Then in that case, if accounts are not to be audited, then in that case the date is on or before 31st July of the particular year. And if accounts are to be audited, then it is on or before September 30th. So dates are different depending upon this, whether accounts are to be audited or accounts are not to be audited. Now coming to the last point, which is regarding mode of LLP tax payment. How the LLP has to pay the tax amount. LLP tax payment can be made in physical mode, through designated banks or through e-payment mode. LLPs that are required to get its accounts audited are required to pay income tax through e-payment mode only. And to pay tax at designated banks, challan is must. This challan ITNS 280 must be provided with the tax payment. So LLP has to fill this challan, and with the tax payment, the challan has to be submitted. So friends, it depends whether the accounts are to be audited or accounts are not to be audited. So both the modes are available, physical mode as well as e-payment mode. So friends, in my today's video, I've discussed all the 16 points regarding the taxation treatment of LLP. So this video is going to be useful for all students who are doing BCom Honors, BCom, BBA, CA, CS, CMA, okay, all the students or advocates or the students who are studying, law subject, who are doing LLB. So all the students are going to get benefit from this video. So do subscribe to my channel, do press on the bell icon to get notifications of the future videos. Stay blessed always. Okay friends, we'll meet soon. Goodbye.